So why should you learn to read stock charts? Because they're the best way to profit in the market. In this video, I'm going to go into a brief overview of stock charts and how you can use them to make money. Hey, how's it going? On this channel, I teach you the steps I took from trading with a full-time job to trading as a full-time job. So if you're new here, consider subscribing. And today we're doing a brief introduction into stock charts. So when you first start looking at stock charts, you'll probably be looking at a basic line graph of the either stock or just the market you're looking at. How these work is you will have on your x-axis, you will have your time, and on your y-axis, you will have the price of that stock or market that's trading. And for this stock, you can see that we are looking at roughly a 10-year interval with the current date of roughly halfway through 2018 and then all the way about halfway through 2008. And as you can see, this stock started in the beginning of this chart at around $80 and then slowly trended up. And how these charts work is because growth in the stock market is exponential. The chart looks like that for these first 8 years, the stock really didn't move that much. And then over the last couple years, you can see that this stock looks like it's just skyrocketing now. And that's just because these stocks go through exponential growth. If you scroll to the left and take out that most recent data, it'll look like that it's always like that the left side of the chart is always doing nothing, and then the right side of the chart is making those huge momentum moves upwards. And really that's how it looks based on being just exponential growth. Of course, this only occurs if the stock is growing. If we scroll back to a time where the stock maybe was going up and down, you can see that it's not always just going straight up. Definitely stocks go down, they go just sideways, they're choppy, they can go any direction. But definitely for stocks that are growing rapidly, they will make that exponential curve that makes it look like the stock has done all of its growth in the last year or two. For these charts, you can look at any time interval you really want. So this chart, each point of data is a week worth of trading, and you can look at just any different time interval. You can look at it in a year for each point, month, weeks, even down to 1 minute. So if we can zoom down to a day, it'll just show you essentially a zoomed in version of what happens, and it'll actually show you more data and just more insight into maybe what happened over that week. When just over a week, it'll show you essentially just where it opened at the Monday and then closed on Friday, even though the stock maybe could have gone through wild swings throughout that week that you actually wouldn't have seen in a large interval time frame. So when you're wanting to look at a company's stock chart, you actually don't type in the company name, you type in their special ticker symbol. And so here we are actually looking at Amazon, and their ticker symbol is AMZN. And so whenever you want to look up Amazon, you type in their ticker symbol. And if you're unsure what a company's ticker symbol is, it's usually pretty easy to just look it up on Google. And for this Amazon right now, you can see that it's currently trading at $1,843. And the market's actually open right now, so you can see that the price is fluctuating up and down. And this will show that it's up this much for the day, and it won't matter what time interval you're looking at. If I change this to a minute interval, it doesn't say how much it's up in that minute. This price up here will always tell you how much it is up in the day, not what interval you're looking at. But the whole purpose of stock charts is to be able to identify places where you want to buy a stock or sell a stock, and really just patterns to make money off of. Generally, fundamental kind of analysis or long-term investing will be looking at a company and their financial statements, and looking at stock charts and using technical analysis will be looking for patterns in the price action of that stock. And these will allow you to recognize when it would be good to buy into a stock and when it would be good to sell a stock. Some of those patterns can be very basic, just like simple trend lines. And what I mean by that is if you're looking at a chart like this one right now of Amazon on a daily chart, we can just draw a line from this low right here and connect it with these kind of lows right here. And what that shows you is places that it might have been good to buy Amazon. So if you saw that Amazon took off and in price and it started going up a lot and you thought, oh, it's too far, or I don't want to get in right now because I'm scared that it might be overextended a little bit, because quite often if a stock goes up really fast, it'll come back down and sell off pretty quickly too, just because stocks don't just go up, they do go up and down. And so here we can see with this stock, if you missed this whole uptrend, you could have waited for it to come down and hit this trend line, and you could have started buying Amazon along this trend line, and that would have been a much safer point to buy Amazon instead of somewhere up here when you are really excited about the stock and not wanting to miss out. You're feeling FOMO, fear of missing out, and that's a really powerful urge, and it's really important to try and fight that, because that can lose you a lot of money, and it almost always gets you in at the worst time possible. Another quick trend line or channel you could have drawn is a channel down here. You could have seen that Amazon was, after this huge uptrend it had down here, it started to trade sideways in this channel. So what I mean by sideways is it would go up and then come back down and then just keep going back and forth, kind of going up and down in this channel. It's not really going up in a significant manner, or it's not going down in a significant manner. So what you could have done here on this channel is you could have bought down here at the bottom of the channel and then sold at the top of the channel, and bought down here at the bottom of the channel and sold at the top of the channel. You could have done that a few times, and as you see, it doesn't always stay exactly in the channel. Stocks don't always stay, or they don't follow your trend lines perfectly every time, but you can see that even though it broke out of this channel, it did actually come down again. This can be a powerful way to make quick trades and make good money while it's really figuring out where it wants to go as a whole next. As you can see, when Amazon realized that it wants to start this new uptrend, it broke out of this channel. That would be another indicator to buy the stock, because the idea is that it's done with this sideways channel and sideways trend, that it's now going to start a new uptrend. And as we can see, that Amazon did make this huge uptrend over here. But honestly, the best part about learning to read stock charts is it gives you flexibility. If you want to trade stocks in the stock market, you can, but you can also apply these patterns and strategies that you learn through reading stock charts to maybe trading in the currency markets or just any other market there is, because they all follow the same fundamental psychological patterns that are created by people trading and investing. The second best part is that you can use them on any time frame you want. If you want to day trade and look at stock charts all day, you can do that by using a 1 or 10 minute chart. But if you want to either have a full-time job or go on vacation, you can also do that by trading with a larger time frame chart that moves a lot slower. So using a daily chart or a weekly chart or even a monthly chart. you don't have to look at this stuff all day, every day to still make money in the stock market. Just to give you an example of using these kind of patterns in a smaller time frame chart, let's actually zoom in into a 15-minute chart. And as you can see, looking at this, it's a lot more chaotic than maybe the daily chart, but you can still use the same patterns that you would use on a larger time frame on a smaller time frame. So looking back here at this low that it made last week, we could draw another trend line. So we would take this low and then connect it to this low right here, and that would give us a line between these 2 points. And over the last few days, we could have seen that Amazon was moving up really rapidly, and we wouldn't want to buy it there because that could be chasing the move, trying to get greedy, or just the stock's moving up really fast, and that can be hard to buy into. So we would want to wait for it to come back down to this trend line. And this morning we can see that it didn't quite touch it, but it got really darn close, and that could give us a chance to say, I want to buy Amazon here and maybe hold it for a day trade or just a couple of days. So if you want to learn more how to read stock charts, you're going to have to learn how to read candlestick charts just like this one. Here's my video on reading candlestick charts. And if you want to learn more on reading candlestick charts and candlestick patterns, here's my playlist on doing that. If you have any comments or questions, make sure to ask them below, and I'll see you in the next video.